Good afternoon and welcome to Money Control. I'm Karunya Rao. With me is Manisha Gupta, and today the spotlight will be on metal prices. After a massive, slump, we're finally witnessing some rebound in metal prices. So, firstly, what's the quantum of this rebound, and should metal traders be happy, or is this a blip?
I would call it a blip because
Okay.
we're not out of the woods yet. But today is a great day. One, we were oversold. We've seen most of the metals in a bear territory. And the big factor is the US dollar index, which has come off 109, has come off 108. So we have seen prices continue to decline on that. In any case, most people were telling you that 110 perhaps is the peak in dollar index. And we didn't see it go there. So the dollar index coming off clearly has helped. And Friday, actually, we saw newer 2022 lows for many of these metals. So there has been some opportunity buying as well. People have been creating short wagers. So there is some buying there and there is some fresh buying too. And all of that seems to be supporting
Which
metals.
metals are these?
Zinc is done best, and copper clearly has rebounded as well because we've seen copper prices fall all the way from 10,800 to 6,900 on the lower side. So that has been clearly a near 40% of a decline. Most of the metals have behaved like that. So, yes, mouth-watering levels for some, and that clearly seems to
But
be
you
the same.
wouldn't call it a buying opportunity, would it? I mean,
It's not a
should one?
structural change.
Okay, it's not. What about the China factor? How's the demand playing out there, and is that also at all sort of responsible for this rebound, or is that operating in an isolation?
No, it is a big opportunity here as well. So, there are two, three things. One is the US dollar, two, opportunity buying, three, a lot of people were short in any case, and four, China has come back with a bang. Not only is the Chinese government telling us that there's going to be a stimulus measure to revive the faltering economy, but it is clearly been about the real estate sector there. So, if we saw the metal prices decline 25% in second quarter, the real estate sector shrank by 7% in the second quarter, and real estate sector in China is nearly 20 to 30% of their GDP or economy. So that's a big number there. And we do understand that there are nearly 200 to 300 unfinished projects. And the thing is that many of these homeowners, mortgage holders, have bounded together and have protested and have said that they will not be paying their mortgages, they will not pay their EMIs. And that clearly has been a concern there because, yes, there are unfinished projects which should have actually finished in last year, are still working on. We've been talking about Evergrande for some time now, and there are more on that list that have been added. So, what the Chinese government has told the banks is that they should go ahead and finance these projects and ensure that they get finished. And there's going to be a work now, so they will be sifted, and the genuine players which are responsible will clearly be financed onto this one.
Okay, so some good news coming in
Clearly
as far as Chinese market is concerned. Are there any laggards that you want to flag off here which have still not shown any rebound or revival of any kind?
Steel, 5% of a decline is how we open trade today, and that is because the steel demand clearly is not coming up. So, another factor to watch out for is that this is a seasonally weak demand period. There is monsoons, so you are not looking at huge construction or manufacturing demand that would come in. But just the fact that, yes, there is not going to be a finance issue in China clearly has been a supportive factor here. And then again, the markets do believe that with the kind of economic data that we've seen come in from US, the jobs numbers, for example. So, markets were talking about 50 basis point and then 75 and then 100. So what we are looking at is that the metals have factored in a possibility of a 75 to 100.
Okay.
So if you see a 75 basis point of a rate hike, then you perhaps might see a rebound coming in. And 50 would mean that the markets would just
Go crazy.
go crazy on the higher side.
But even if there is, let's say, 100 bips hike, there won't be much of a reaction, is it?
Because
no
we've
knee-jerk.
factored that in. We've spoken about it. We've analyzed it. And I don't think, I think those expectations have now been more justified. That 75, yes, 100, clearly not.
So apart from the Fed meet, any other monitorables for the metal traders and enthusiasts who want to track the space?
I think Thursday would be important again because you have the European Central Bank meeting, first rate hike in 11 years perhaps, Bank of Japan Central Bank meeting, Chinese Central Bank meeting also is happening in this week itself, and you have a whole host of inflation numbers, manufacturing data. It is going to be a very busy week, but the week has started positive, and perhaps today, tomorrow, couple of days look good for metals. As I said, do not take it as a trend reversal. Don't think that you are changing your portfolio onto this one. But yes, if you're stuck, then this is perhaps a good time to look at metals.
Okay. All right. On that note, we're wrapping it up. Thank you so much, guys, for tuning in. We'll be back tomorrow once again at 1 o'clock to give you a fresh update on commodities.